Money has been pouring into Silicon Valley startups. According to a new report, venture capital spending is on track for a record year. PricewaterhouseCoopers says $16 billion was invested in more than 1,000 deals in just the third quarter. But that's a 5% decline from the second quarter. And as Josh Lipton reports, some are now wondering if the venture capital market is starting to cool.
It is a great time to be an entrepreneur in America. That's one take from recent data showing the surge of money flowing into startups. There has now been 7 straight quarters of more than $10 billion deployed to these young companies. In part, venture capitalists say this rush of money can be traced right back to the Federal Reserve. As central bankers leave interest rates near zero, investors are forced to chase returns and potentially higher yielding assets like the equity of startups.
With the Fed's decision to keep interest rates low and push out the rise in interest rates, what they're doing is encouraging people to push up the risk curve. And people are searching for growth, and about the only secular growth area is technology. So there's a lot of capital which is being pushed up the risk curve looking for growth, and they're going into technology.
The flow of money has boosted the number of so-called unicorns, or startups valued above $1 billion. There were 79 unicorns around the world at the end of last year, according to CB Insights, a firm that tracks and analyzes venture capital. Today, there are 142. The question now is whether the good times continue. Ganesan says venture capitalists, if they're going to keep pumping money into startups, need to start seeing actual cash returns on their investments, meaning startups need to go public or sell.
I think we're getting close to the show me the money stage. For this kind of investment to continue, you need to see distributions coming from IPOs and M&A markets. And as you know, the IPO market has been choppy. But if you don't see those distributions start coming soon, we will start seeing this investment come down.
There also could be signs of cracks already developing in the startup community. Note-taking app Evernote recently announced layoffs, and mutual fund investors in Dropbox reportedly marked down the value of their holdings in the company by 20%. Venture capitalists have already invested more than $47 billion in the first 3 quarters of this year, but the next few quarters will be critical in determining whether the party continues or whether startup founders will have a tougher time raising those big rounds of funding. For Nightly Business Report, I'm Josh Lipton in San Francisco.